Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 18th of March and what a day it has been for the markets. Spectacular rally in the markets, much awaited rally, something that everyone was waiting for quite some time. And it had the seeds of this were sown actually 10 days back, when we made that bottom, and from there we actually have recovered very smartly, and a lot of indices are already up 10% from the bottom. In fact, Nifty has also covered almost 800 to 1000 points from the bottom it created. So it has been a good smart recovery, and I think the markets are taking a sigh of relief, because it was just one way fall, 5 months of fall, continuous 5 weeks of continuous negative closing for the markets, and it was becoming too heavy for the market participants to take. So even these 500,000 point relief rallies, even if they are just a relief rally and not change in trend, even that is good, because it gives you time to regroup, it gives you time to analyze the situation, it gives you time to rebalance. Because when there is just one way fall, then a lot of times the market gets into the panic mode because there are a lot of margin calls that get triggered, etc. But if the fall is accompanied by some relief rallies in between, it is more palatable. So I would see it as a relief rally right now, and I had talked about it in my video on Saturday also, that our market is going to rally on Monday, and Monday also, yesterday also, we did all right, and today came the real kicker, wherein we closed the previous resistance. We closed higher than the previous resistance, which was actually becoming a big resistance for quite some time, and I'm going to show you in terms of the charts how it is looking, and we were able to cross that, which is good. So where do we go from here, and what are the cues looking like, and how was the day today? I will take you through all of that, and I will first start off with how the Nifty was. I won't talk much about the Sensex today, though Sensex expiry was there, because there was nothing much to talk about. My positions in Sensex are very, very less, and I'm contemplating to reduce them even further, because the way Sensex is behaving, it is not working out too well in my kind of system. So I don't know what the reason are. Maybe it's the volumes, or maybe it is the very high sharp movement that happens in Sensex options, but it is not, or let me put it, it is suboptimal to the other instruments that I trade. So I would be reducing my positions further in Sensex as we go along as of now. So this is how Nifty was. If you look at it just opened, and I don't know why this red candle was made just at the start. It was a very steep red candle. Maybe it was to inflate the puts or whatever. But then after that, it was a sharp, smart recovery, and we would be closing at almost the high point of the day, which is 22,800. So basically, that makes it almost 1,000 point rally from the bottom. And this was the resistance that I was talking about, which is 22,670 odd. And I will show you why. So if you look at it over here, we tried to cross we tried to cross this resistance on 24th February, then again on somewhere around this 7th of March, 10th of March, but we were not able to cross this, and finally we have been able to cross this with a kind of a gap up, which is what I have maintained, that typical resistances are and supports are broken on huge gap ups or huge gap downs. So this is what kind of played out today as well, and now we are above this resistance line, and now you see over here this downward sloping line is the one that is crucial for us to cross, because once we cross that, then we are going to make a higher high for the first time after many months. So but if not, if we are to reverse, then perhaps we might reverse from somewhere around this zone and we might go down. But let's see how much legs does this particular relief rally has, because in the previous relief rallies have lasted about 10-15 odd trading sessions. This one is probably 20 trading sessions. So this one, this relief rally is already now 8-9 trading sessions old. So let's see till where does this finally culminate into, and whether this actually breaks up like this or it finally breaks down. Because if it breaks down, then this low of 21,900, 800 that we formed is not going to hold. Then we are going further down. As I have maintained, that the ultimate bottom probably could be the election day low of 21,286 because I'm not forecasting anything below this right now. But there are two supports in between. 21,700 and 21,200 is the ultimate one. Now, something interesting happened in the open interest as well. Now, if you look at the open interest today, what happened was that there have been huge number of call addition. So, 5.4 crore, huge number of put addition, 5.4 crore puts have been added against 1 crore of calls. And if you look at the OI has turned hugely bullish with 1.37 as the PCR. So, there are about 18 crore puts versus 13 crore calls. So this kind of open interest has not been seen for many weeks now. It was common in the earlier previous bull run till September, wherein we used to have PCRs of 1.4, 1.5, but since then we have been having PCRs of 0.5, 0.6, 0.7, and we are very happy if we have one kind of PCR. And so 1.3, 1.4, 1.5, it had gone to almost 1.5 today, if I'm not wrong, at some point in time. So these kind of PCRs are a distant memory now, so to say. But so as it may be, this is a good bullish sign. And until unless the world markets tank or there is some big reversal somewhere. By the way, the Fed meeting is coming up, so I will talk about that as well. Wednesday night is when we will come to know about the Fed decision. So Thursday expiry might have some impact of that, and also let's see how the premiums behave tomorrow for the options because of the Fed meeting. Though it's being said that there are going to be no rate cuts in this particular meeting, but still a Fed meeting is a Fed meeting at the end of it. Another interesting thing was possibly the melt in premiums. So if you look at Nifty straddle premium, we opened at somewhere around 220 odd, and now we are at 180. So not much is left for 2 days, if you ask me, because if it opens somewhere around 170 tomorrow, it closes at about 130, 140, then we are left for basically 100 points for the expiry, which is not much. So typically 100 points for expiry is, you will not be able to realize too much, because if there is no premium, then how are you going to realize on both the sides, especially on call and put, both the sides. I've seen when the premiums are more in the range of 130, 150, 170, 180 kind of range, that is when you actually can make very good money on the expiry. But when it is 100 points and you're fighting for 100 points with the movement, easily exceeding that, yeah, it's a different case. If you've got a 100-point straddle and the Nifty moves 50 or 80 points during the whole day, then yes, then you'll realize good money. But typically 100, 120 is like a zone where you think that if you make less money, it is fine, rather than losing on both the call and put side. So that has been my observation. Now coming to, like, for example, in Sensex today, though we opened at I think 400 odd, but immediately we shot up to 480. So first the calls went, and then a small slight dip in Sensex ensured that the puts also went, though it was a put selling day and nothing else was supposed to be done. But that is where I was saying that handling Sensex is slightly tricky, because the returns are also less and the movements are much more wilder. So yeah. Now coming to how the heat maps look like today. So it is a sea of green today after a very long time. So in Nifty, ICICI was up 3.2%, M&M 3.16, L&T 3, Adani 2.5, Adani Ports 2, Trent 1.8, Titan 2.2, Shriram Finance 3.12. In terms of Nifty next, it was even better. ABB 4.4, Bosch 3.7, Havells 3.6, Lodha 4.6, Chola 4, Union Bank 4, BHEL 4. So you name it. Varun Beverages 5, almost 5. Zomato 6%, HAL 4%. So huge gains today. And after this index has been down some 27-28% from the top. So even this kind of recovery is still places this index much lower. Now let us look at how the sectors played out today. Now if you look at the leading one was media, because simply media has been the one that has been going down the max. So let's ignore that. But small cap made a smart recovery, 2.68. autos 2.36, metal 2.1. Banks possibly could be the next leaders of the bull market. I don't know, because banking and financial services have fallen the least. Now one can argue that it never went up that much, so they fell the least, but I'm seeing some green shoots over here. Mid cap 2%, financial services 1.86. IT is also up today, and VIX is down minus 1.6. Now if you look at where we are in terms of the where we are in terms of how the indices are placed from their 52-week highs. Now, yeah. So if you look at Fin Nifty is now below 5%. So that means it has just fallen 5% from the peak. So it shows you that the maximum strength is in this particular index. Banking is now below 10. Private bank is leading that. Okay. Nifty 50 is still minus 13% down. So in spite of it recovering today and so on and so forth, it is still minus 13%, which is quite a lot. Right. Nifty mid cap is minus 17. So mid cap is showing more strength than Nifty next. Nifty next is minus 22% almost, and small cap is again minus 22. IT is minus 20. FMCG is minus 21. So it is still very, very weak. You look at the momentum index, it is down minus 30% still. Realty is down minus 30. Alpha is down minus 30. So we are nowhere out of the woods. But having said that, there is some strength which is coming back, which is good. So even it's a relief rally, it is good, much appreciated and welcome. Now let us look at how the international cues are stacked up. International cues are all perfect, right? S&P futures are flattish. Okay, they were majorly red. Now as I see it, US 30 is green, and US 500 is all flat, and US tech is minus 0.11. So it's basically flattish. You can call it flattish. US 10 years is slightly gone up, which is okay. S&P VIX is at 20, which is cooled down a bit. It had gone to 27, 28, so which is good news for us. Bitcoin is at 83, struggling, trying to hold on. US dollar index is at 103, which is very good. And Brent oil is creeped up above 70, but still under 75, so it's fine. Our currency has strengthened a bit, but the champion of all this is gold, again above 3,000, and silver at 34. Oh, almost touching 35. That's big moves in silver as well. So gold and silver are the ones that are doing very well. The other cues are absolutely fine, no problem in them. So where do we go from here? As of now, it looks bullish. As I said, unless there is a huge movement overnight and something happens. PCR is fine unless the PCR completely reverses. But having said that, inherently still the market is weak. It will slowly try to climb up, fail, again try to climb up. We are going to see massive pullbacks, because in my opinion, you know, the bear phases don't end in 5-6 months. The markets might bottom out. Okay. That's a different story. Markets might bottom out. Like for example, what happened in June 22. Now you might think, where did I get this June 22 in? September 21 is when the last bull cycle peaked. Okay, and from September 21 we crashed till June 22. So for those who are new to the markets, please go and check the charts, and you will get a sense of what I'm saying. And June 22 is when we bottomed out. Okay, but not until March 23 the markets started their rally. So from June 22 it was, we used to go up a bit, then come down, then go up, then come down, but we did nothing till March. Okay, the previous highs that were created in September only got taken out a couple of months even after March, if I'm not wrong. So this is, you know, one might argue that we might have bottomed out at 21,800. Who knows? I don't know. But if we have, it's not that suddenly we are going to cross 26,000. Okay, it's going to be a slow, gradual process wherein you will get stocks that you wanted. Low quality stocks, the valuations are going to come down, right? And people are going to add to their portfolios. People are going to rebuild their portfolios, because portfolios have been devastated. I've seen a lot of people, their portfolios just gone, because they had put in all sorts of names in them, which are no quality and no growth, just order books, just stories, high PEs. Those portfolios have been really cracked open. So if your portfolio strength is there, and how will the portfolio strength come in? The portfolio strength will come in if you have good hedges in terms of diversification. You have gold in your portfolio, you have international in your portfolio, you have fixed income in your portfolio, you have quality stocks in your portfolio. You need to have a combination of all that to withstand this kind of a fall, especially when some names have fallen almost 40-50% from the top. So if your portfolio quality has been good, then you would be happy right now, and you would be able to add during this correction. But if your portfolio quality wasn't good, then it's a learning that for next time that you should be building good portfolios. And that just reminds me of my initiative that I help people build their portfolios through mutual funds. So if anyone is interested, they can fill up the Google form and I'll get in touch with them, and I'll probably help them build a very good solid portfolio which can withstand a lot of market turmoil, and it's going to be based on quality, diversification factors, and a lot of other things. So if anyone is interested, please fill up that form. So yeah, so times like these are good for portfolio building, as I have been maintaining. Nifty is still down minus 13%. So, but stick to quality, stick to good names. Don't get into things which you don't understand, right? Just because someone has told you to get into a stock, don't do that. Now, coming to options, how March has been. March is after today, it had gone into green, but after today, I think it will be just flat again. So March is going, it's been a nothing sort of a month, but that is on the back of a fantastic February. So possibly all the gains have come in February only. But the year has been very, very good, and I'm going to make a video of that once the March ends, and I'm going to share how the year has been and what my learnings have been. But the year has been very good, luckily. And in spite of all these changes and weekly expiries going and margins increasing and this and that, the year has been very good. So March is okay. I'll be very happy if March doesn't give any negative. Even if it closes here, it is fine. But still, there are some 7, 8, 10 days remaining. So let's see how it goes. Because what I've seen in options is that the way you will make money is that some few days there'll be stretch of huge money coming in, right? Typically that happens when volatility is decreasing, when the market is recovering, when the VIX is going down, and those 4-5 days are enough to take care of the entire month, right? What one needs to be very careful about is the big loss days, because that is very painful. So as long as you're able to navigate those, your monthly PNL looks very, very robust. And that is what the aim should be of all the people, to do that. So that's it from me now, and I shall see you with another update tomorrow. If you like my content, please do subscribe to my channel. I share my views. I'm a full-time derivatives trader. I share my views on the markets, derivatives, trading, investment, and if you like my content, please do like my channel and share it with your friends. And I shall see you tomorrow with another update. Hope you guys had a good day as well, and I shall see you tomorrow. Bye bye.